What's going on, traders? Hope everybody's having a great weekend. Wanted to do a recap here and some analysis on the S&P 500. Of course, this video is for educational and entertainment purposes only. With that out of the way, let's get started with the economic calendar for this week. Certainly a few things that we want to pay attention to, as well as some important earnings from a lot of the big tech names that we also want to be aware of, as they can certainly move the market. So first, let's go into the Market Watch calendar here and take a look at the economic data we have this week. So taking a look at that, Monday is quiet, nothing scheduled. And then on Tuesday, a quiet day. We'll pay attention to job openings at 10 o'clock though. Wednesday, pretty quiet up until 2 o'clock. We have FOMC, the Fed interest rate decision, coming in, and Jerome Powell, of course, will speak 30 minutes after that. So high volatility, high impact day there on Wednesday, last day of the month. So we all want to be careful coming into FOMC. Thursday, it doesn't end. We have initial jobless claims at 8:30 and S&P U.S. manufacturing PMI at 9:45. ISM manufacturing at 10 o'clock as well. And that kicks us off the first of the month. And can you believe it? January is over already. And then Friday, February 2nd, we do have non-farm payrolls. We will be paying attention to that at 8:30, coupled with the U.S. unemployment rate as well, and U.S. hourly wages. So some unemployment data there coming in, all in at 8:30 that we will pay attention to. So big week ahead as far as economic data is concerned. All right, let's go over a couple of the earnings. I don't have a screenshot of that. I will post it to my Twitter, though. I can't put it up on the screen at the moment. But we do have a couple of names that we definitely want to pay attention to. After the close on Tuesday, we have Microsoft, AMD, Google, Starbucks, all reporting. And then in the morning, actually, we have JetBlue, UPS, GM, Pfizer. Those aren't quite as much of a market mover. Still pay attention to those, though, as well. Wednesday, Boeing in pre-market. MasterCard also coming in there. And nothing else really in pre-market that is too important. But after the close on Wednesday, we do have a few comms, so pay attention to that with the semis. And then Thursday, we have Peloton, not really too much of a market mover. Honeywell, Merck, we'll pay attention to that. But all eyes are going to be on Thursday after the close, because we have Apple, Amazon, and Facebook Meta all reporting after the bell on a Thursday. Friday, we just have some earnings from Exxon and Chevron for the energy sector before the market opens on Friday. So big week ahead, FOMC, and we're running through the gauntlet of the tech names. So it will be a highly volatile week, and we should probably exercise some caution coming into that. All right, so with that out of the way, let's go and start off here with the weekly chart, see what we can take away from that. Well, there's really, we pulled in another new all-time high here on the SPY, and we did see a little bit of selling pressure after we hit that all-time high, pulled back a little bit, but full body green candle there. Buyers clearly in control. And from the weekly perspective, what am I going to be really watching? Well, we all should have our eyes on the previous all-time highs, right? And we can kind of make a little bit of a range there, give it a little bit of room, but really, we're looking right at 480, right? That's going to be about the line, but we can give it a little bit of leeway, come down to the body of this candle from this January 3rd, and bring it down to around 476.50, right? So this zone really needs to hold here for continuation. Now, we've just made a new higher high. Is it crazy to think that we could afford a higher low to be put in the markets here? So, something like this, we pull back here, and then we see that next move up into the 490. We got real close to that 490 level. We were talking about that in last week's video as that potential target. I believe it was over 185, 485. We were talking about that 490, real close, but I do think maybe we could get a little pullback into this area, and then we can make that push to that 490, and certainly over that we're going to be targeting that 500, right? But you know, the other thing that I think is important here that we're looking at, you know, as far as these highs being respected, is where else and why also I do think that we could potentially pull back into this area. Well, here I'm going to take this off, but if we were to make this, right, what is this, 1 2 3 4, maybe a 4-week balance zone, right? So we had this consolidation before we had broken out, right? Now the all-time highs is pretty much the top of that balance range consolidation, right? So there is tons of liquidity there, and it would again not surprise me to see a little bit of a pullback to retest the top of this structure, and that really sets us up for a nicer long, right? This, you know, coming in here at the all-time highs buying, I don't really like that as far as an entry. We wait for that pullback, a weekly or daily lower, higher low to be put in, and then we look for that bigger move like this. We can manage our risk way more effectively waiting for this type of a move, and then we initiate a new long position. You know, it is a bit obviously risky, you know, if you're still in a long coming into FOMC and all these tech earnings. So you know, I think a lot of buyers that are, you know, still pushing the markets up higher are hesitant to stay in the trade too long, especially ahead of this week. And this was also kind of illustrated by the moves that we saw on Friday with a couple of with a fake breakout basically. And Thursday, you know, we had a bond auction, or maybe it was Wednesday, causing a little bit of trouble in the market, but we really didn't break down at a lower part of this range. And you know, that's really also what I will be watching to give a little bit more of a potential confirmation for any downside momentum. Certainly, as I mentioned, you know, we're going to be looking to see obviously holding over that 480 all the way down to the 476.50 as I had mentioned. But if we do start to break under that, we're still okay, no big deal. We can trade back down into the lower part of the range. This gives us a little bit of more of a neutral stance because we did break back inside of this balance zone here. But either way, it's still, there's nothing really to be, you know, too concerned with, you know, in my opinion. All right, so let's take a look at the daily chart now and move it right along. Let's look what we can take away from the daily chart. Let's get, here we go. Okay, so you can see here, you know, how we tried to break out of this flag, right? You know, we'd come up here, have a nice 3-bar, we tried to make that move to the upside, could not break out. So, you know, it's interesting here, you know, we can make a couple of different, you know, little balance zones here. We've got kind of a 3-day range, right? And then we've got about a little 2-day range right here, right? So I'll be paying attention to these structures to see if they hold, and, you know, possibly giving us, you know, some type of a possible daily higher low, you know, maybe around that 482.50 or 485.50, somewhere around in that area, could offer us another opportunity. Personally, you know, I would much rather the longs into the 480 or down a little bit lower for a little bit better risk to reward and trade location. But these are still viable options. I think that these really might be something you want to pay attention to more on the intraday basis, to know that, hey, you know, if we start to really take out that 485, you know, 25.50 area, okay, then we were going to look to trade probably back down into the prior 2-day balance right here, and that would take us down, you know, maybe 483 all the way down to, in the lower part of that range here would be, let's mark it off, right around 482.50 thereabouts. So we'll be paying attention to that as well, before potentially, we can go ahead and make that true higher high on the daily. We tried to break out here obviously on Friday, and we did just briefly make a new all-time high, but these kind of longs are, again, kind of, it's a tricky location to be long with any real conviction here, right? So once they're seeing the profits, they are taking it. And let's break it down a little bit more into the hourly chart. And this is going to take away my boxes there. Okay. And so, and even if I could, I could do this. I marked it at the all-time high, but we can take it here and bring it back to Wednesday's high, right? Because this is where this is kind of better illustrating this fake breakout that we had here. You can see kind of this hanging man on the hourly that was put in, and then we saw that reversal to the downside here. This Wednesday, this was the Wednesday from the bond market, Friday from the bond auction, and then Thursday there was, they tried, the sellers did try to break down out of this range, but you can see they never really were able to break down with any conviction. So until proven otherwise, we obviously have to give the ball in the court of the bulls. And again, as long as we're holding over last Monday here, the opening price, we never got below last week's range here. You can see those Monday highs really acted as that new SR flip here, and that's where we opened on the Thursday session, and pretty much where we double bottomed there. So we'll definitely be paying attention, right, to that Wednesday high as its active support. We start to lose that, then we kind of come back down into this, and this is that 2-day consolidation that we were talking about earlier when I was doing it on the daily. So right now a 3-day balance, if you will, a 2-day balance to give us our week of trading, and certainly under the what is this? This is from Friday's rally. Certainly under Friday's rally, we want to pay attention, because if we start to break under the highs of Friday's rally, that's that 482.50. Look at the hourly candles here, and if we pull this up on the volume profile, we'll see that this, has a bit of weak structure here. So if we do start to really break back below here, we would probably want to look a little bit more towards the short-term short trade, and look to see if we can trade back down into that potential 480, 480.50, and anywhere in this area could be an area where you can build into some type of a swing position for those moves back up into the 490s, as we were talking about earlier. So that still would be healthy price action, again, to pull back as long as we hold this zone. This the prior all-time highs, and then just down we gave it a little bit of leeway, and yeah, it is about 4 points or so, but that's why, on swings at least, I like to work into those positions. I don't take the whole thing at once. I anticipate a little bit of a pullback drawdown, and then I add into my position accordingly. So let's pay attention here. That's what I'm looking at here from at least an hourly perspective. Of course, if we do start to break over, I would either be looking for long trades at the bottom, right, to see if this is supported, or I'm not chasing the breakout here, because again, look what happened to people that tried to chase. This was showing us again on Friday that the buyers really are uncommittal up here, and I understand why. It is not the best trade location. They see those profits and they are taking them. So what would we really want to see is a push over, right? We don't chase the breakout. Let me get that out of the way of the bubble. We want to see a push over and a retest of the prior structure, and then we look for the high, right? So that's what I would prefer for the long trade, or trying those trades down here by the bottom. But of course, keeping in mind they have been tested a few times. They tried to break here. This has been tested a few times, so it may not be as strong as it once was if they keep on hammering on this door. Eventually it breaks, and then of course we don't chase the breakout. We look for this, we look for the retest, and we look for the trade down like so. All right, so that's pretty much the overview of what I'll be looking for potentially this week. But again, take everything with a grain of salt with the FOMC as well as non-farm payroll, and of course those blockbuster earnings, not the company, but I'm talking about a lot of the names in the quote-unquote Magnificent Seven with Meta, Microsoft, Apple, Google, Amazon, all reporting this week. So it should be very, very fun to watch and see how these numbers come out and how the market responds to them. All right, so let's move right along here. And what are we going to look at now? Let's break down. Okay, this is actually one thing that I did, and we don't normally go over the Qs, but I did want to point out a divergence here in the Qs from the weekly chart perspective. Let me just take this. Where are we here? Let me take these off. I could take this off, that's fine. Because the weekly candle on the Qs looks a little bit more concerning. And like I said, we don't normally go over the Qs here, but I was looking over this earlier, and you see a much different story on the weekly candle print on the Qs, and I think that this is worth mentioning. The Qs did hit all-time highs first, so we are seeing a bit of that selling sooner, or this is kind of less of a surprise that we're seeing these sellers. But just look at this candle here. You can see this high wick, and let me just draw it out, right? And then we've got, a flat body. Let me do this again. Boom. Boom. And boom. Okay, there we go. So what is this telling us? Way more selling pressure coming in on the tech sector, pushing us down, kind of a gravestone doji, if you will. This is, mark that with the difference that we were looking at in SPY, which is looking a lot stronger on that daily, on that weekly candle print. We just went over that, and you can see much more of a full-bodied, stronger candle there versus the Qs, and so I think this is something that we want to be cognizant of, as the weekly candle does not look quite as constructive. Of course, we are still holding over all-time highs, and very similar situation here, where this is that previous balance. So we could see that pull back around into the top of that, maybe towards 414. What's the high here? It is it's 413 basically, and previous all-time highs is 408. We can call it 50, 408, 50 down to like 405. So anywhere in that area. But as long as we hold over this, everything's fine. We could again then just see a pullback into the top of this prior structure balance, and then we look for the moves up into 430. I mean, we pretty much tagged 430 already, but we'll see. Probably breaking over to these new highs to give us 435, I would think, in the Qs. But we can afford a higher low to be put in any of these markets. But either way, candle's a little bit more concerning. One thing I did want to also point out was I was looking at the RSP here, and she's doing a lot better. Honestly, I was noticing a bit of this. We still are obviously diverged, have a divergence from the all-time highs in the RSP. However, the equal weighted here, we're trading in a bit of a balance. We can make an argument for some type of a flag starting to form here for the pattern traders. But as long as we hang out here and we kind of come in back and forth like this, we can look for that move breaking out higher, and this would just really suggest the broadening of the rally in the market, because earlier in the last week with NVIDIA going crazy, SMCI, AMD is still very strong as well. The semi is really leading the charge up higher, and we didn't see overall as much of the total market participation. But now we're seeing the RSP really moving a lot stronger and a lot healthier, suggesting that broadening out of the rally in the market, or at least how this is looking strong versus the selling that we are seeing in tech, that the market is just rotating, right? And that's perfectly healthy and normal in a bull market where we don't see necessarily all the sectors running at the same time, but yet the money changes from the risk on moves from the tech, and then it might go into the banks, and then it might go into the safer sectors, like materials, industrials, what have you, and then just kind of make that rotation in and out at driving the whole market higher, right? So I think that this is a positive development for the market to see RSP really starting to get over, and we broke these equal highs right here, so that's encouraging. We want to see that hold for that potential move up higher. Are starting to get a little bit of overbought readings here on the weekly though, and I did want to point that out. We can go back to QQQ really quickly. Definitely overbought here on the weekly still, and you can see here what happened last time we got some of these readings up this extreme again. That's what gave us the pullback, or helped give us the pullback. Obviously, of course, we had rates and everything going on, but we are seeing those extreme readings again, so we're watching it again. It doesn't mean that we're laying in short, but we want to be cognizant of that. We mentioned that in the video last week as well, and SPY also showing these big overbought readings here on the weekly as well. And of course, we will look at that monthly print as we come to the close next week and February starts. So we'll see what this monthly candle ends up looking like. All right, let's move it right along and take a look at our some of our internals here and see what we can take away from that. We'll start off with the VIX and the put call ratio, see what's going on over there. Okay, pretty much equilibrium here on the put call ratio, and VIX really not threatening anything under 15.75, under 15, just hanging out in this complacency zone. I mean, not even the complacency. I would be a little bit more worried if we were down here under 12. That's where I would start to get a little bit more scared, but as long as we're hanging out here, everything is good. No real trouble signs from VIX overall. Let's get into the internals and the futures here a little bit. Take a look. I thought I deleted this. Stupid. Okay, VIX futures still in a deep contango here. No worries going on here. There's the zero line. I just had to recently change the contract over, so no problem here. 9-day versus the monthly, still under the zero, no problem. We saw the bounce on the VVIX, the precursor to the volatility here, right off that 75. A little bounce, but just hanging out in the range. Really no warning signs from the VIX in my opinion, so everything looks good there. Let's take a look at the new highs versus new lows here, see if there's anything we can take a look. Pushed up a little bit here. We're still over zero, so really no issues coming on here. We're not seeing super strong readings overall, but we still are over zero, and that is all that really matters as far as that is concerned. Okay, so let's move it right along. We're just blasting through this stuff. Let's look at the Dow and the transports. They would pull up. There we go. Dow and the transports. All right. Well, Dow making new highs once again, hanging out still above all-time highs. Same situation. We kind of tried to break out higher here. Failure to really have that continuation, but as long as the Dow still holds over the previous highs around that 37.814, as long as we hold over that, no problem whatsoever. And actually, I can bring even that down just a little bit right there. So as long as we hold over that, But 30, well, basically 30, what is this? 37,795, we could call it. As long as we hold over that, no issue there. And we're not even seeing the overbought readings here on the daily. On the weekly, I'm sure we are. And the transport's actually kind of making a little bit of flag here. We still see the divergence, but nice bounce here from the basically the 15,200 area. A little fake break with a little hammer recapture, giving us that nice rally, and then getting back over these previous highs, and now kind of looking a lot like the RSP, just hanging out in the balance zone. And we'll see if this actually wants what it wants to do. But as long as it doesn't break under the 23rd, the lows of the 23rd, everything's fine there. And looks like we're just getting high and tight for a potential move back up into the previous equal highs up here, more towards that 16,175. So that, if this consolidation holds, that probably would be the next target. See if it can get over those equal highs, and then probably maybe take us into the 16,264 area. So, all right, everything. There is the divergence, obviously, but it's not really that worrisome. The transport's made a nice comeback from some of our levels here. So, no real cause for concern. But we will, of course, and have been noting the divergence, right? All-time highs, and we are not even close on the transport. All right, so let's keep it moving along here. Let's look at the SPX 50R and the 200 are how many percentage of the stocks trading over their 50 and 200 moving averages, simple moving averages respectively. Still over the 50% zone, just basically hanging out at 75. Everything's good here. Yes, we did have that little bit of a pullback. We'll see if it kind of starts to want to break under the 70% mark. You're never really going to see, every single stock in the market trading, over their 50. That's not really, a viable scenario. But we're hanging out still over 75, over 70. Really no issues here, and really no issues in the 200. A little bit of a pullback, but nothing is really too concerning. Again, 50% is our benchmarker, so everything's good in this land as well. All right, okay, I think we really hit everything I wanted to go over here. There's nothing really HYZ that's bothering me. No, just hanging out here. Nothing really going on. No divergence. Okay, everything's good there. Okay, perfect. So let's get back into some of the other charts here and look at just some other levels. Now, we did, of course, go over some hourly levels that we want to pay attention to. Whoops, on SPY. But we will break down some other levels as well that I will be paying attention to. Now, let's go over, okay, boom, okay. And actually, let me push this out a couple more days for the rest of the week. Boom. Expand this as well. Oh, shoot. So here's some more levels that I will be paying attention to this week. There we go. All right, so here's kind of the bottom of the range again that we were watching earlier. Around this 486, 486.75. We want to see that hold, on the Monday session. If we start to break below that, we can look for potential trades back down, potentially down to the 486 area. We'll watch these highs here in pre-market. Actually, I'm going to mark this off right here on this chart. So we could see a little bit lower. We could see trades back down into the whole number 486. Potentially would be a possible intraday buyer. there. But if we start to break under that, we will look for trades down closer to 485.30, maybe 25. And then potentially look for longs in that area. But if we do start to break underneath, especially if we have weaker internals on an intraday perspective, then we could potentially look to trade, especially if we break 485. We could come and retest the lows here from Wednesday, certainly under that, and under 484.10. Then we might have a little bit more fun and come back down, trade to the bottom part of this previous 2-day balance. And that's taken us down to basically 483 here. And that also is gonna coincide with that Friday high that we are want to pay attention to, because again, we said earlier, if that breaks, there was a lot of thin structure here created on that Friday session, on that Friday rally. So we do want to be aware of that if we do start to see some selling momentum. And again, that would really be only if we start to break under that previous high. So it still is a tough trade. Again, I'm more of, there, certainly short trades to be had, right? Here right at the open, boom, Wednesday obviously offered a nice short trade, as well as Thursday. But overall, generally, we want to be a little bit more long bias and looking for opportunities to go with the trend of the daily and the weekly chart, right? Because nothing, buyers are clearly in control, so especially from that intraday basis, we want to look more on the long side. And that doesn't mean if we're in a clear downtrend, right? It doesn't mean you're just going to be just blindly buying because, oh, it's going to bounce. You pick your shots, you wait for the right opportunity, and hopefully some of these levels will help you out in maybe finding potential spots where you want to wait for a long entry. And, you keep your wrist tight, and then, you might be able to catch a nice, 3R or 4R trade in the opposite direction, right? So, all right, so here's some levels there. You've all got them now, and let's now we have created a bit of a balance zone here. We did not have one in the last session because we were waiting for some more data to be printed. And okay, here we are. Okay, so this is going to actually take this is the whole week's balance basically here. And so, for me, is that okay? So this is a little bit bigger, obviously, because the week's range. So if we came back down into the 480, 485, 50 zone, I'd potentially be a buyer here at the half gap, looking for moves back up into 488, maybe 488, 32, 25, somewhere in that area. That would be the trade that I would be looking for. And actually, I think I have to adjust that. It's pretty close. But under the 485.50, let me actually just bring this to a whole number. Under the 485.50, I will look to trade to the bottom part. Now, I'm going to be a little bit cautious there because you can see here in the pre-market how, it broke underneath and then kind of recaptured, and that gave us the launch pad. But underneath there, I get a little bit more short-sided, at least from the intraday perspective. And if we trade under that 485.50, I think that it's not really the best, trade, to think that maybe we could come down to these previous lows. So honestly, it's a little tricky, because obviously right here on these lows, you've got the highs from the Tuesday session right here, right? So we want to be cognizant still of that 484.50 as well. I think that really might be the better idea to look if we break under, that we could have a little bit more, how should I say, conviction that we'd potentially trade back down into the lower part of the balance zone, and that could take us to trade all the way down 484, 483, 30, and then potentially down 482, 80 into the bottom of the balance. And the bottom of the balance down here, I certainly would be a potential buyer looking for trades back up into 485.50 or maybe just back up. See, really, this is just not how I work this strategy personally, but you could really say that, this area here is, kind of our half gap, but I don't, it doesn't really, it's not really the right way that I have come up with this, to do this, but we just kind of want to be cognizant of this zone here. So we'll wait and see. I'm gonna, we'll see how this week plays out, and if we get a little bit more data as price delivers into these areas, and I will look to see how buyers or sellers do start to react, and maybe I'll start to make a little bit refinement on this zone, but I do think that this is valid overall. It's just this area here in our half gap that's a little bit tricky, so we just want to err on a little side of caution on this zone. But either way, we're above the 485.50. There's my arrows, and we're looking for trades back up in this direction like so. All right. And then maybe we could hit some type of a short, or underneath we are looking for trades like this. Whoops. Boom, 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 and then this is our long area for potential trades back up into the half gap. And in this case, of course, if we're trading back up into the half gap, we could see a sell there back down to the equal lows in the bottom of the balance once again. So that's pretty much everything I wanted to go over. What else? I know what else we're missing. We didn't talk about the dollar TNX. Let's go over the dollar really quickly because we still are in pretty much a bullish holding pattern here on the dollar, and I think that this could offer a potential headwind as we've been talking about to the market. So far, it's been shrugged off by the market overall. There we go. But we still want to be cognizant of it, especially as it looks like they've finally fixed the charts. We were getting all these weird reads on the candles, as you can see here, but they finally looks like they fixed them. But we have broken out of that downtrend, and now here we're hanging out kind of in this balance zone. I definitely still think that we could, and remember we had that 200 period moving average giving us some issues here on the simple moving average, which was right here, and that does pretty much line up with our 200 EMA, are all kind of in this area, but we're in this holding pattern right here, another kind of balance being formed. Let me get that a little bit tighter, but you can make that argument for the next flag, right? We had the flag here, right? We went from range expansion, we had our contraction, expansion, contraction. Well, the likely thing, as long as we hold the bottom of this, basically the 103 area, we can see the trade potentially develop into the 104. And again, if we get over that 104.50, we do want to see, we could have a little bit of issues here from in December. You can see we had some stall outs in the 104.25, 20 area. So maybe we don't make it all the way into 104.50, but that is the general direction where I think we could be heading if the dollar holds. But we'll see, obviously, with FOMC how this is going to react to whatever the rate decision is, and more importantly, to what excuse me, what Jay Powell has to say at 2:30. Okay, excuse me. All right, let's look at 10-year TNX here, the 10-year, and very similar situation. Chart's looking very similar to the dollar. I remember I had this up here just to illustrate that we are in a new uptrend for TNX. I'll just remove that for this case. All right, so for the dollar here, we are in that same type of pattern. Now remember, we went over, we had this of a, wasn't as clean, but again, a type of a flag formation here. An expansion, some contraction, expansion. Now same thing, kind of more of a little bit of a flat top potential breakout flag here though, regardless. But we're in a holding pattern. Let's see if they hold over 41. That's, those are the lows from the early in December, the 6th here. So if we start to break under that, then I'll feel a little bit more comfortable about the 10-year. Of course, all this can change with FOMC. But as it stands, this looks bullish. The dollar looks bullish. And I think we could potentially see a move right here into the basically 43, 42.75 maybe, anywhere in that area. And that's going to be the next area of contention where price may be drawn to. But what may end up happening if this does break out, what I will be watching for at that point, if we do break out over, it can come up here, reject, come back and test the top of the structure, put in, and this would be a higher high to be put in on the put in. Then we get a lower, higher low, and then we see something like that. So that is one bullish scenario for the 10-year. And again, this can put headwinds on the market, but we will see how this looks at after FOMC, and that will be interesting. So all right, I really appreciate you guys taking the time to spend with me to prep for the market together. I really appreciate each and every one of you. If you're interested, and I keep on forgetting to mention this, if you're interested in any of the products that I use, check out the link in the description to my link tree. You can find all the links of my options flow service that I use from Whalestream. And if anyone's interested in futures, we do have some prop firm links as well for some discounts, yeah, just a bunch of other ways that you can help support me and support the channel and businesses that I stand by. So other than that, I hope everybody has a great weekend. Enjoy, if you're into football, enjoy the championship games this Sunday. And I hope everybody has a great week. Remember, a profitable trader is a prepared trader. So let's trade our plan and let's plan our trades. Let's be extra smart this week with all the earnings and FOMC. And again, I appreciate every one of you. If you enjoyed the video, smash that like button. If you're new and this is your first time, hey, it's free to subscribe. It makes me smile. So anyway, hope you have a great weekend again. Take care, and I will see you guys on Twitter.